Hi everyone. Today's Tuesday, February the 25th, and this is the Moneyball Morning Report for the Benzinga Pro platform. We've got some news coming that might be a little bit important for us. Consumer confidence, probably the biggest thing that might jolt us a little bit. And then, towards the end of the week, we've got some pretty interesting releases that we need to watch out for. Let's talk about what happened yesterday. So notice, if we do things simply, and remember, simple is always better than complex. Always. It's just easier for our minds to work around. So have a gander at this. This is the Fibonacci for, let me change this so we can see the line a little better for what we're staring down. Notice, yesterday, we gapped up, went into the volume point of control, this area at 60.67 in the E-mini S&Ps, which is a line in the sand. I said, hey, listen, this is an important line in the sand. And we got up there, could not get it, and then sold off the rest of the day. Now, we'll leave this fib here, and we're going to measure the fib from yesterday to see what the lines in the sand tell us there. So the halfway point is 60-25, 60-30. This green line is the exponential 50, right? Actually, let's see if we can put the 200 is way down here, but let's see if we can add a simple moving average. Of course, Trend Spider is my choice here. I love their stuff. I really do. That's why I use it in the morning. There's our 50 simple moving average, and we tried to bounce above it, immediately lost it into the day, and now we've made, watch, 1, 2, 3, 4 days of lower highs and lower lows so far. Bounces, clearly sell zones at this juncture. We have momentum down, we have trend down, and we've broken a very important moving average. Now, my thought is the traders are going to try and recover here. Now, here's something super interesting. This morning, Dennis Dick from Pre-Market Prep, they used to be on Benzinga, and now I think they're off on their own thing. But he said, hey, I'm buying stocks in my long-term portfolio this morning. Well, I think it's because he is expecting that we have some sort of base recovery up over the 50 because the last 1, 2, 3, 4, 5, 6, 7, 8 times we've come into this 50 on the daily, we've bounced. So what could be different? Could be the same. So what's the line in the sand if price action holds? If price action holds, we hold the low of the overnight. Okay, now let's go to the 1 hour chart. Whoa, that is super noisy. Let's just leave the fibs on here today. Remove all horizontal lines. Right, we know the ones we're looking for, and the fibs show them up really well. So here's the opening hour of trade, right? Notice we fell below it, immediately began to consolidate. The number I was looking for down here was 59.81. It began to consolidate around that zone and immediately bounced. What is the trend? The trend is down. What is momentum? Momentum is down, but it's got itself a kink. Okay, so remember, when trend is down and momentum is down, bounces are sell zones until you start seeing a floor. Remember what a chart has to do to turn around. First, it's got to stop heading lower. Second, it's got to breach resistance. So we thought, here's a shot. Maybe it'll hold into here. Listen, you can always take the trade from this edge, holding a low of the prior day, into resistance. We know this area at around 60.11, right? Super important area. So what we want to see is now on the pullback, can I still hold the low? Or can I make a higher low? The trade collapses right here if you're looking for a bottoming formation. So you think about it again and you go, all right, let's see if it'll do it this time. Trend is down, momentum is down, right? The 50, I don't like that color at all. Sorry, pinks are normally my 50s. And we are well under the 50 on the hourly chart. So bounce is very likely to be sell zones in this kind of formation. But what do we want to see? Fails to head lower, bounces into resistance, pulls back, and holds a higher low. As it sits right now, I am going to look for the short at 60.24 or try the long at the double bottoming at 59.80 with about 4 points of risk. That's going to be what I'm after today. Let's go to the NQ. Hello, NQ. And let's delete all these horizontal lines. We know this fib is important, but we're going to remove all the fibs. Nice and clean. And we're going to go to the day. All right, what are we looking at? Momentum is down. Trend in the near term is down. Now, we've got NVIDIA earnings after the close today. The whole world is watching this one. All right, as it sits, bottoming, higher low, higher low, higher low, higher high. Okay, broke out, went sideways. And so where's the go, no-go today? My thought is it's got to stay up above 21,400. There is actually a gamma line right there at 21,450. Gamma lines have been moving in 50 lots here. Notice the same thing happened the day before. Here is the Fibonacci here. Here's the 50 per, ooh. What? All right, let me move this out of here. Okay. Here's this fib. I'm going to reverse it so we can see the bottom of it. Reverse. To see what downside pressure might look like. If the chart, notice this is the 50. Every single time, it may have spent a couple of days under there, but the traders have been buying it up. This, excuse me, this means that if we don't hold this 50, it's different this time, okay? So the go, no-go is going to be the low of the price action here in the overnight for the E-mini Nasdaq. And that number is 21,290, but the real floor, I think, for selling pressure is underneath 21,450. Notice the gap up, very shallow, and the traders almost immediately selling off. What are they trying to hold? Prior day's low, 21,400. So watch that area. Let's go to the 1 hour chart. What can we see? We can see the same sort of thing. Here is the opening range candlestick. Above it, buyers are going to get excited. Below it, sellers are going to get excited. But look at the bottoming formation, 21,300. Let me see what that gamma line is. Hang on a second. Let's see. 21,425. 21,300, right? That's a GEX level right there. And we can see the traders trying to hold the space. What do we need to do? Bounce into resistance. Where is that number? 21,460, 21,450. That's the sell zone currently. So if you want to come in here and say, okay, I want to sell it here, your stop needs to be no more than 20 points wide. That's it. Okay? I'm looking for either the double bottom at 21,300 to hold, or I'm going to watch for this liquidity line at 21,510 to 21,500. Why? Because yesterday we saw 4 1,000 lots in the queues come in here on the bid to try to push price up, and it did not hold. So that's kind of a big deal, right? It feels very weak to me, okay? All right, so that's what we're looking at. Line in the sand, 21,300. Below it, we continue forward. The low risk short is going to be up near 21,510 with a very tight stop. And that's what that looks like. Let's go to the YM. Sorry about the sniffles, folks. I'm definitely under the weather. Okay, so here we are. What's trend? We know this was a topping formation. We could see it from the past, right? This 45,000 break. What have the traders been trying to do every single time? No, they're trying to buy the dip. Wick, wick. No wick, just straight buying. Wick, and then all of a sudden, all the wicks get lost at this 44,400 level. You should remember, if you've been listening to me, that 44,400 level, make a break, and it broke. So where are we? Underneath the 50. What should the trader try to do? The longer term trader is going to say, hey, I'm going to try and buy this bottom. What does price action need to do to confirm this upward motion? If, per happenstance, it holds the area, it's going to have to get back above 44,000, right? The 50% fib says 43,900. That's almost where the 50 is. You can see heavy congestion. But bounces, which are fairly likely this morning, should come into this 44,400, at which point it'll likely be a sell zone. Now, let's say you're bullish on the market and you're thinking, hey, it's un-American to short the market. I hear that as a joke all the time. What are we looking at? Well, we've got a bottoming formation, a fair bit of liquidity. Look at the 1 hour box, the opening range candlestick, right? Opening range candlestick. Where are we right now? Inside. What did we try to do? We tried to sell off of the moving average here, but held the floor. So what is the number to watch today? 43,400. Lots of liquidity trying to build there. But there's a heap of selling pressure sitting down here. 100%. So what are we looking for? Bounces to sell. And that number is up at 44,000. That's the thought I have. Now, I'm looking for the long in the YM at the bottoming formation of 43,400 or a short up at 44,100. If it doesn't come to me, I'm not taking the trade today. Okay? Not going to do that in the YM. I'm going to wait to see how they stabilize. If I go to the intraday and I can see pressure building at 43,500, I might take a small trade there, but the bounces surely to be selling pressure in my mind. All right, let's go to Bitcoin. I've been talking about this one falling off a cliff. Here we go, right? It's been sitting in this wide range. Apparently something happened with Libra, or I don't even know what happened. Yeah, weird. But in any case, liquidity is going to get sucked out of this market. All right, so let me delete all the annotations. I'm going to start over. We know what's happening. This is a very wide formation. Remember, I said, well, you know what? 85 might be where we're at. So if you remember, you might remember me saying, you know, I'm going to try and buy some down here. I'm not doing that right now. This is the beginning of a liquidity flush. I think easily we go to 81 and then 75. That's going to be my thought. Take a look at how price action behaves. If we're just using these simple Fibonacci's, we'll start with 3 days ago. Take a look. Right? Look where the 50% is, 97,200. Bounces right into that zone, just shy of it, 96 and some change, and then begins to fail. right? So now we're looking at this candlestick from yesterday, a little more shallow. But what are we looking at here? 88, 87, 85 in terms of the breakdown formation. It's come into that 85. Traders are going to try and bounce near the VWAP, but any kind of bounce action here into the 93 zone, going to be selling pressure. Absolutely. They are trying to pick the bottom. Notice, here's the opening candlestick formation. We are well below it. 91,000. Big fat number. Big fat number. We continue to bounce into selling formations. See this cross current? Momentum up, trend down. It's telling us that the traders are looking to clear out inventory on the upside because trend is down and momentum is up. And that gives us candlesticks that have a tendency to retrace each other. Let's take a look at oil. I read an article by John Kemp this morning that said that we have tremendous drawdown in gasoline reserves. I find that to be very interesting. I don't know what to make of it. I really don't. Here we are, 70-50-ish volume point of control. Take a look at the range that we're sitting in. We are in this box, essentially, right? Failed the zero line, broke it. Listen, if we cannot hold 70-20, we are very likely to head lower. So what's the trade? If I can get 71.40, I'm going to short it. It's breaking down. I think this goes lower. I have no idea why it's moving this way, but this is my thought. Now, here's the flip side. Let's say this Maribozu candlestick that we saw yesterday that bounced right off 69.78. It's holding the 61.8 retracement at this time. If it loses it, we head lower. If it holds it, we get to go up to 71.50, maybe even 72.20. For me, ideally, bounces into 71.50, going to give me a sell zone. That's what I'm looking for there. Let's take a look at gold. Also saw something very interesting on this. This one I think is going to get a little bit top heavy right now. Okay, so what are we staring down? Well, we're staring down charts that have been eking higher, and then all of a sudden we've had, look at how many days of compression. Take a gander. Look at that. 1, 2, 3, 4, 5, 6, 7, 8, 9 days of holding 29.27 or immediately recapturing it. So what are we looking for? A break down or through those levels, right? Where has the short been for the last 1, 2, 3, 4, 5, 6, 7 days? 29.70, right? Where have the buyers come in over the last 1, 2, 3, 4, 5 days? 29.27. If we lose 29.27, look out below. I think we head back to 2800, right? Let's take a look at a weekly candlestick formation. We are still inside of 3 weeks of price action. So let's draw this Fibonacci here to see if we see any other number. Nope, 29, 26, something like that. If not, 28.87, right? And then easily 28.34, and then the topping formation breakout 27.84, okay? Very strong chart, but it's showing some weakness. All right, let's look at SPY. Gosh, I feel like I've been talking for an hour. Okay, let's delete all our lines in the sand. Don't be afraid to do that. When I was a younger trader, I would draw these amazing lines and get very nervous about erasing them. Listen, learn to replicate what it is you're after, and you're going to draw great lines. Everything is not going to be exact. Trading is a gray area. Everything about trading is gray. There's nothing black and white, and that drives some of us pretty stinking crazy. I'm not going to lie. It certainly drove me crazy in my earlier trading years. All right, I'm going to do it in the other direction. Candlestick from 3 days ago broke down, kissed the 50, bounced, could not get past 605, and then collapsed. Closed the day under the low of the prior day. Today, what do we have? Lower high, lower low, but the 50, which is right around this area, the 50 simple moving average, traders look at that a lot. They're going to go, hey, my first collapse, the last few times I've done that, it's maybe spent a day under there and I'm off to the races again. I'm buying the dip. So expect traders to try to buy the dip today. If you want to follow along, just make sure that you are watching price action carefully. Okay? Qs. Oh, underneath 600, we're likely to sell, but we could easily test 605 again in the SPY. All right, here we are with the Qs. Going to delete all these. Of course, you can go to yesterday's video and you can see the lines. They work very nicely. We were looking at bounce action in this zone, right? And so let's draw Fibonacci here. Oh, for goodness sakes. I know the Fibonacci purists want to burn an effigy of me, but I assure you, traders, the simpletons they are, they will trade the 50 and the 61.8 time after time. The break of the 50 says, hey, below that, I'm buying it. I'm going to hang on. But here's the rub. Momentum is down. Trend is down. We've had higher lows and higher highs. So if we bounce and we cannot recapture 526, there's more selling pressure below. Okay? And we head back to 512, and there's a ton of liquidity here at 505. A lot of buying pressure starting to show up here. So I do believe traders are going to try and buy these dips. We could see a double bottoming. I am seeing inventory correction all over the place right now, and that is, they were short at the open, and then they've just continued to rise up. All right, everyone, that's it for me. Hope you join me on the Benzinga Options Show. Looking forward to seeing everyone. Take care.